Hello, traders. Wanted to go over a little bit of today's price action today. We came down. This is a 4-hour fair value gap right here. We traded down to the top of this fair value gap. We wicked into it just barely on Nasdaq. Over here, the ES is just a little bit different situation. It did not have a fair value gap down here. Well, it did have a fair value gap. Not bad. We traded through it, and then we reversed. Where ES, we respected it and then went on back up on NASDAQ rather. Okay, so let's just look at the reversal patterns on each. That's what they look like on the 4-hour chart. This is the ES over here. This is the NASDAQ over here. And let's go to a 1 minute. And we'll check out this reversal pattern and see if it meets our criteria. Okay, 1 minute. Let's get on over there. Okay, so we came down, we touched into the top of that fair value gap there, which is a major level. Whenever you're looking for these reversal patterns, they are most reliable if they've taken out a major higher time frame low or PD array. Okay, so we take out that low just by a little bit, not much at all. A couple of ticks. And then, so this is our lowest point. Our breaker is this little green guy right here, the last up close candle before the run on liquidity. Okay, so it's that one. And over here on ES, it's even smaller. There was a lot of things going on there on this setup that was making me a little nervous about taking it, because we did have some other lower hanging fruit that I thought we could possibly trade to. And I'd watched ICT's video, and he said if we got past the previous 4-hour low, that we may see more downside. It's right here. And we also had the 50% retrace down here. But the previous 4-hour low is right here. And we just absolutely fell out of bed all night, went through that. No problem at all. We had new week opening gap to the downside. So I was a little nervous about taking the trade, but I did take the trade. I was actually up at this hour. So this is all happening during London. We wick that out. We go back above the breaker, come back below, creating a higher low. We trade back through the breaker. We pull away with a fair value gap. So you could get in right there. No problem at all. One tick above. I think this one would have filled it. And aim for that fruit right here. Then we come back down and we respect it again. That's the money shot right there. So you get in there, but by this time we're into New York AM session. But you could have gotten in right there. That would have been a great place to get in. Over here on ES, same kind of pattern. That's our breaker. We come down. We take out the full fair value gap on the 4-hour. We come up, higher low, push through, leave this area with a fair value gap. We aim for this fruit. I think we might have got that one. No, we left that one, made relative equal highs. So when we come back down and we touch this, we've left liquidity above. That's good. And then we wick into this. We respect it with candle bodies, 100%. It does not pierce the bottom of the breaker. With candle bodies, only wicks. And then, boom, fair value gap there. You could go long right there. This one would have filled you, and you would have been good all the way to the weekly high. It was 400 points away on micro. One micro would have paid you $800. One micro. So yeah, we went to the moon after we hit that breaker right there. Very, very nice reversal pattern. If you weren't up during London, it was difficult to get in after that. But I was in a buy the dip frame of mind. I was nervous about it because he said if we got below that level, this level here, we'll probably see ranging. And so I was nervous about holding that, and I did take my profit way early. But, it was a qualifying day on the XFA. Can't complain. Got some money in the bag, so Not going to complain about that. But if I would have held it or left one on as a runner, man, that would have been sweet. That would have been real sweet. We went all the way up. That's from this second touch to that weekly high, which is wonderful. I'm still expecting it to go higher. This is up here is a fair value gap, but just to the weekly high right there, that line is $397.50. We'll round up to 400. That's 800 on one micro. Not bad money on one micro. That's very, very little risk, decent profit, and you could have added somewhere along the way, but you would have had to hold through the open. And I don't know. It was just I would prefer this setup come at 9:30 in the morning, or 9:30 New York, like 10 o'clock New York, or 10:15 New York. Then I wouldn't have to worry about holding it through the open. If you tried to enter into here, it was a whole lot more difficult. It used the top of the NWOG for its retrace. Over here, the 25%. Oh, here we had the NWOG plus the fair value gap that we pulled back to on Friday. I was kind of using that as an area of contention. And it actually gapped through there. That was crazy. It gapped during live market conditions. That's a gap in the price action. So we traded back through that, took out this low, but ultimately respected this fair value gap right here multiple times for more upside potential. And that's where I actually got the rest of my trade on, was right there on this fair value gap. But reversal signal was there. It was not the best time of day for it. Remember, be kind to yourself. Be kind to one another. Where are we going tomorrow? I don't know. We're already at the highs. I think we're going to head to all-time highs, but I don't know. We could come back down. We could range here, like ICT said. He knows a lot more about this than me. You can watch his video. I think it was 58 minutes long, where he went over all this possible price action. We're right back to where he said, this is settlement today. Settlement from Friday was not much different than that. I think it was about here. So where are we going next? Who knows? Until next time, y'all trade well.